It's a video chat presentation of the Aristocrat Group. It's an OTCQB company trading our ticker ASCC. See, the stock's been in a downtrend from up around 60-70 cents last summer. Been slowly sliding off. Found a pretty nice support level at 8 cents in January. Broke through it, but looks like it found a bottom at 6 cents. Back on the rise, and now pressing on that old support level, which is serving as resistance. But in classic TA fashion, if it breaks through that resistance point, the price per share may have a nice rise in it, including trying to break back through this 50-day moving average. Now, as the price per share has been trending down, you see the MACD is starting to trend back towards zero, and even getting pretty close to that critical point of trying to break back through zero, a move technical traders refer to as breaking the money line, because it indicates a trend shift towards bullishness if that happens. So as the MACD is approaching that 0 point, it's something to pay attention to, especially given the idea with the stock trying to rise from the 6 cent point to push on resistance. So that's a key element to keep in mind going forward. Coming off a bit of a PPO ADX pinch, not getting a great deal from the ADX at this point, other than notably it's declining, indicating that the direction is losing some strength. Money flow index trending below 50, that's a bearish sign. You can see the 7, 14, and 21 have a little bit of a rise to them. The 7 actually just popped through 50. Again, kind of at that make or break point where it's time to pay attention to it, because all three components moving through 50 is a bullish sign. Accumulation distribution is kind of trending sideways. As some buying pressure comes in, some selling pressure follows. Can also see that in the Chaikin money flow, a break up into the green. It says over a 20 period increment, buying pressure is outweighing selling pressure. Break back down to the red indicates that selling pressure is now outweighing buying pressure, which should pretty much be expected given the price per share movement. Commodity channel right there at 0, very neutral reading. It says the price is currently at its 20-day mean. Full still right at 50. That's a neutral sign of momentum. Readings above 50 indicate bullish momentum. Readings below 50 indicate bearish momentum. You can see over the last week or so, the momentum was trying to push, gain a little bit of bullish steam, and right now is stalled out at that 50 point, which makes sense considering the price per share is sitting at resistance level. In the tricks, it's a gauge a trend like the MACD, still in bear chart territory below 0, but starting to rise. Much like the MACD, the breakthrough 0 indicates a shift to a bullish trend. Going right along with the full still, the relative strength index, probably the most commonly used gauge of momentum. And see what a difficult time it's had moving through 50. And that's why with all three components, the 7, 14, and 21, sitting at that level, that's where it's time to pay attention to it, to see if the bulls are going to take control. And all three parts of that indicator move into bullishness by rising to the upper half of the indicator. So what I'm seeing by taking a quick look at those lower indicators in the RSI is a chart that looks like it's trying to find a bottom. The indicators definitely aren't as bearish as what might be presumed, given the price per share sliding off the way that it has. And what I'll watch for going forward is that bottom support at 6 cents, should the price per share slide down. But most importantly, what I'm going to be watching is that resistance level at 8 cents. Now, I'm not zoomed in close enough. Stock Charts just has this listed as a 7 cent close. If you zoomed in closer, you'd see it's actually 7.3 cents. Again, not really that important. What I'm looking for is the break of 8, because then what I see from a resistance standpoint is the 50-day moving average as a dynamic source of resistance, and some more static resistance not coming in play until up near 12 cents, which from a percentage standpoint is a real nice gain from Tuesday's close. And in the broader scheme of things, it might be identifying the 6 cent mark as a true bottom, and then we just have to look at the indicators to look for a true trend shift towards bullishness and potentially the start of a new uptrend off of this base. Volume was light on Tuesday with the down day. Not even 17,000 shares traded hands. You see that's certainly below average for this chart. If a break of resistance happens, I'll definitely look for a little bit taller volume bar, show that there's more buying interest in this play, and then on any potential pullback, I'd want to see it sit on that 8 cent mark as a new support level, and then try and rise from there. So those are the things that I'll be watching for in the ASCC chart, but as always, merely my interpretation. Thank you for watching. Trade smart.